So, yeah, I'll probably upload this right away. Here's some thoughts. I haven't looked at the charts today since yesterday. Obviously, there's been absolute carnage in markets. I don't fully know what's going on with the Japanese bank, but something broke. I don't know what exactly. It's the first time. Well, the Bank of Japan started hiking rates while the U.S. is about to start tightening. I don't know when the last time this happened, but I think it seemed like maybe a lot of things were set up for this not to happen. If you look at the Japanese stock market, it looks like March 2020. I mean, it's down 30% in a week. It's insane. And yeah, I mean, the U.S. markets, the crypto market, ETH was down. I don't know where it closed, but it was down over 20% in the day. I think that's the biggest down day since March 2023 or longer. I don't know. Actually, I think it's the biggest down day since FTX. I think 3 years, the biggest down day. So, the NASDAQ, a lot of things way down. And from my back testing, what I found, it's tempting to be like, everything's on sale, I want to buy. Right? Step in and buy the dip. But I'm going to tell you why I don't think it's the best idea. Now, there are times where everything V reverses, like March 2020. But most of the time, bottoms take not just low prices, but time. So, price fucking dumps super hard. And then the bear market, it bleeds or goes sideways. And then time, and then price goes higher. So there doesn't necessarily need to be a rush to get in. So the back testing that I have finds that the best sort of dip buys, one, it's dangerous to buy dips under the 200 moving average because there's a chance it's just going to be a long downtrend. So most everything's under the 200 moving average, and you can make money buying dips under the 200 moving average as an investor. I'm talking about investing, I'm not talking about trading here. However, the problem is the data showed the risk of severe drawdowns are much higher. So it's better to be buying a breakout on the far side, or also the best dip buy signal is when price comes and takes a major low that's between like 15 and 90 days and then reclaims it. That's a good time to buy. Why is that? Because it shows more local strength, that sellers were unable to push price lower, and buyers are coming in. And when you look at levels that are years old, they're not nearly as powerful. They can work, they're just not as good. So what price has done is it's come down and it's revisiting levels from more than 90 days, 6 months, year. Yeah, I don't know where price is today, but it's more like 6. To me, these levels are expired. And just because we took a low from 6 months ago isn't necessarily the best time. So I'm saying that if you're an investor, to be patient here, and you don't need to rush in and buy necessarily. And it depends on your goal. If you want to try to make money, you can, but if you want to try to be safe and conserve what you have, my system, the MTP system, which you can check out, there may be a link in the bio or bio of other videos, or you go to marketwinningmachine.com. I haven't checked today, but for almost anything, it wasn't going to print a buy signal. No buy signals. Again, I haven't checked price in about 12 hours, but why? Because it's old signals under the 200 moving average. So what's a better thing to wait for what I would want to see to buy a dip is price to go sideways, and then we take today's low in September, potentially. And that would be an excellent dip buy opportunity. Or we bleed down for months, and then price starts to revert, goes sideways, and the SMA goes flat, and price starts to move up, and we start to have breakouts. That's also where I'm interested in buying. But the current scenario of just price went straight down, I mean, you can scalp reactions, but and also if you have no leverage, it might be okay, and you just want to try to hold, it might be okay. But I mean, for my back testing, even though we want to buy low prices, you got to be really careful about that. And yeah, I mean, also it becomes tough to trade too when the volatility goes crazy. Like the size of the days have been crazy, right? Like the Nasdaq's trading 3 to 5 times bigger than it was on average, right? These massive 5% down, 5% up, gap down 5%, just crazy. So you have to cut down position sizing, you have to cut down leverage, and yeah, it's okay to wait, right? I think when we think about market opportunity, a lot of the time the market opportunity isn't actually from the sharp moves. It's from the when volatility contracts and things get slow, right? Because, you know, where do you put your stops, right? It's so volatile and unpredictable right now, it's easy to lose. When things get really slow and tight, things often are more predictable. It's a better opportunity because of the possibility of volatility expansion as well. So, yeah, it's what it is. Happy trading, just try not to blow up here. I know people have been trying to catch the bottom, and then they think they catch the bottom, and then, yeah, I mean, just be prepared. You might you might buy a good price, but you have to hold for a month before it really moves in your favor. That's more typical. Yeah, anyways, appreciate y'all. Much love, and happy trading. Peace.